Good morning and welcome to Trading with Larry. I'm joined every day by Eric Shamalov to the right or left of me, depending on how you look at him. He's with us this morning, and behind me is Touchdown Tommy Maples. There he is, my analyst and my partner in crime in our office in Boca Raton, Florida. And Eric is joining us from Brooklyn. And it's funny, people want me to come on this podcast and smile it up and be happy, and I'm going to use one saying right now. Okay, there's no crying in baseball. I don't know if you guys know what movie that's from, but League of
League
Their
of their
Own.
own. League of their own.
Exactly. So there's not a lot of smiling in trading or crazy happiness. So I'll give you a little smiles, but really we're down to business here. A lot to talk about. Trading's a funny thing, and people always ask me what one of the most interesting or the most asked questions to me over my career in different interviews, etc. What's your best trading day? And people like what is your best trading day? How much money did you make in one day? And that number is in the tens of millions. To answer that question, probably I don't know, probably 50, 40 million, something like that, 30 million in a day. But really, I always talk about this. The most important trading day I ever had was the first day I made $1,000. And for people out there that are watching, I think, that's really apropos because that was the day that I realized potentially that I had the ability to do this. Up to that point, I was knocking around. I couldn't really make money, and I never really made $1,000. Now you got to back up in time to 1984, 1985 for that. So maybe that's a trading day of $5,000 now or $10,000. But back then, making that first thousand was the most important thing, and it led me to believe that I could do this. So for people watching out there, I think it's important that you keep that in mind. Just getting to the point where you could put a positive day on, um, and then from there developing consistency and doing that day after day, and then getting all of the other components that make up what I consider a great trader. So I was thinking about this, coming on this morning about, people want like all happiness and sunshine, but really trading is a business. And people think, you have your first, great trading run or trading day and you go out and buy a Ferrari or something. It just, to become really professional at this, you don't do that. You don't look at the numbers, and then the numbers become really just business, like if you were selling widgets in a manufacturing business. So I was thinking about that when we were coming on the air this morning, and I wanted to really share that with you guys. But checking markets over the last 2 3 weeks.
You have a lot of great stories from your trading career. My favorite one is when you said, because you started in the pits as an options trader. So my favorite one is, the pit is where you're like Wall Street is the only place where you have degenerates standing right next to PhDs. And I thought that
Oh,
was the thing.
listen,
I think it
that
still
was
holds true today. You
well.
know,
Well, the greatest part about that, really, and that was an assembly of some of the greatest traders that I've run into in my career. Obviously, the business is completely different now. There's no yelling and screaming. I tell my kids about it, and they like laugh. They're like, "How could you do that? Like, how did you know who you traded with? And how did the whole thing go on?" And it was a period in time that will obviously never exist again or never have a reason to exist again. But it was sort of the only way to do business. And when I first started on the floor, They had automated trading for the first time back in the middle 80s, and retail customers for the first time were able to enter orders through a computer. I think that happened late in the 80s and early into the 90s, and all of that now is gone. But what was incredible is you had a kid who was 18 years old that graduated Harvard 3 years early, standing next to a guy who was a convicted felon, and they were operating together, and it was pretty unbelievable. But
And snorting
what
coke
I
off the yeah.
what I thought was really the most amazing thing about the trading floor was everyone stood at that time in a pit. There were, the pit that I'm talking about is XMI. It was the major market index. It was actually the first index that they ever did program trading with Susquehanna and, all the guys getting into basket trading where they were able to buy, not one stock at a time, but a basket of stocks at one time. And they were able to move the market. But I don't really want to talk about this a lot, but I'll leave it with this. Some of my best friends to this day in the world are from the pit of trading, and we traded against each other every day. I wanted to take my best friend's money. So the interesting thing about that was that we were in full competition to get every good trade against the other guy, and then also to take their money. And then as soon as that bell rang at 4 o'clock, we were out, at the bar or out to dinner. And again, these guys are the most reliable people, as far as friends that I have in my life. But it was a competitive environment. But we'll talk more about the floor, more stories, etc. But I want to get to the market. And I was driving in this morning, even though my drive is not really too long, 15, 20 minutes at the most. I was thinking to myself, I'm a little disappointed in my trading over the last couple of weeks. I wasn't aggressive enough on the bottom. We did buy stuff on the bottom, but we didn't hold long enough. And then, we shorted in what I considered a trend within a trend, meaning like I thought the trend was lower, and I thought we had moved too much or the rubber band stretched too much, and I got short some stuff. Again, which we'll talk about a lot on the show, is we utilize option in all of our strategies so far at the opportunistic trader. So your risk is defined. So we're not getting killed. It's never fun to lose, but we've been not making money for the last week and a half, 2 weeks, and we actually yesterday rolled some positions. When I say rolled some positions, that means I took positions that had lost a little bit of money, gave them a little bit more time by moving to another month, and put a little bit more capital into the position. So, we're convicted here that the market is going to come in. Obviously, we're talking equities. It's not showing up right now as we speak. Markets are making new highs of this move. It's pretty amazing to say we're at 5,900 when 3 or 4 weeks ago we were at 4,800. So, and Nasdaq, the move is even greater. It's from 16,400 to 21,000 and some change, which is these are moves of 20 to 30% in less than 3 weeks. So it's a little disheartening, but we're hanging in the position. I'll throw it over to you. You can let me know what you're thinking, and we can move from there.
Yeah, we've been talking about this, the effect of momentum in the market, but now I think there's actually institutional level FOMO happening right now. I think on the institutional level, investors are afraid of missing this move, and all they've been seeing lately. And you even saw it with Ray Dalio come out with a piece yesterday, and he's saying, "Look, all these deals are going to look reasonable," and blah blah blah. A month ago, he sounded like we're entering a new world order.
Oh, wait a second.
So
So now you're telling me he's bullish? There's no way Ray Dalio is bullish,
I don't know if he's bullish.
his
I
whole
think
mantra has nothing to do.
he's
No,
definitely you read his piece from yesterday. He's definitely incrementally more bullish. But hold up a second. So this is what I'm saying.
no.
I think that I think that the market bought the high here, and I think now they didn't buy the low. You could see it in the volume. I mean, we could pull up these charts. I could show you, and you know that they didn't buy the low. And now I feel like psychologically there's institutional, not just retail level FOMO. I feel like there's institutional level FOMO.
Well, let me ask you a question. Now you got my blood boiling a little, okay? It's ridiculous what you're saying. FOMO of what? The market just moved 27%. Okay?
That's
So
the whole
you're
point.
sitting there in your
Why?
office. Time out. Okay? You're sitting there in your office and you're going, institutional guys are having FOMO. They missed out. They missed it. Okay. The move,
Yeah,
they're not getting another 26, not even close. And they certainly won't get 10 or even 5 at this trajectory. So you're running into, a point where it's major, you know, a major move that's going to basically consolidate. So when you say who's sitting in their office going, they missed it or they have to buy today. Why didn't they buy
I
today?
I could tell from the fact that the number one performing factor over the last couple, actually over the last week, has not been growth. It hasn't been value. You know what it's been? It's been liquidity. Liquidity over the last few days has been the number one performing factor, which tells me that on an
Well, why
institutional,
why don't you why don't
they're
you
just
back
looking for anything to buy that has volume,
well
where
why
they
don't you
could get
back
in
up?
and
Why don't you
transact.
back up a little bit? Okay. I've been with you for years. I don't know how many. It's been a lot. That's why I'm graying up top. Okay. If you guys
Me
can
too.
notice, let me tell you
Me too.
what. Okay. I don't even know what I love when you throw this factor in. Why don't you tell people watching out there? Because I'm sort of, I just think it's just another thing you're looking at. You're putting it in factor because you want everything to be sort of algorithmic, which is fine. I'm old school. I'm still pushing the button, and Thomas behind me is pushing buttons. You probably have like supercomputers behind you running whatever
I,
you're running. But my question to you, honestly, is you keep
yeah.
saying factors. I'd like to understand what are the factors? Are there 500 factors, 1,000 factors, 5 factors? Like what factors are you looking at? Like what, like you're saying liquidity. How are you picking up on what a liquidity factor is? That's the top factor. I would say we had very light liquidity. We discussed it yesterday a little on the move up. We've had very light volume. Okay. We've had I'm looking, I don't, know what factor you're looking at, but I'm looking at E-minis, which is the biggest market in the world, in general. And those numbers look light relative. So when you're saying yesterday, I'm just curious for myself because I want to learn exactly what you're talking about. What is a liquidity factor? Like, how is that giving you something to go on, and how is that going to help us today?
So let me share a couple of charts with you, since you're curious. So the liquidity factor that I'm talking about, this is a long short factor based on liquidity, which is ranking the S&P stocks based on um, how much volume they trade on an average basis. So the higher the volume, and if those stocks are outperforming the stocks with very low volume, this chart starts to go up. The line on this chart starts to go up. So what I've noticed around the peak, when there's max FOMO in the market, right around the peak of the market, you could see, like right here, right around February, when we had the peak of the market, this was a top performing factor. And now you're starting to see this perk up. The other factors that I'm looking at is something like low volatility. You know that. That's the safety trade. Right before we had, and we had this last year as well, right before the Japanese carry trade broke, you had low vol stocks start to outperform before the peak. You had that this year as well, right before the peak in February. So these are the kinds of things that I look at. I'm looking for relative performance between these kinds of factors. So when I see liquidity as a factor start to dominate, that just tells me institutional investors are trying to pile into stocks with a lot of volume just so that they could get in and transact at a cheaper level.
Right, but to me, as a trader and a money manager, I'm looking at that as actually true negative. Okay, and the reason why I'm looking at that as a true negative is, as you saw, people got out of these stocks. They didn't get out on the highs; they got out when they were rolling down. Okay, and then they went to the safety trade, like you showed the chart, which was a great chart, really, really good chart. Um, and we're seeing from institutions sort of the same type of thing. Some of these institutional brokerage firms are seeing flows into high beta versus um, the protection safety trade. So to me, I want to position the other way. Okay, I think the moves have been extreme here. I think they're pushing, on the high. And listen, this could end right now today. It could end in a couple of days. But when I start to see that, like you're looking at that, I guess to give you clues on the market, and I think you're looking at that in a way that it's bullish, and I'm looking at it the
No, no,
opposite.
no. No, I'm looking at it actually the exact opposite. I'm looking at that as a big negative.
And then let's throw a couple of different things on the fire here. Look at the currency market. We talked about it a little yesterday, and that's been a real clue. When the market came apart, the dollar got crushed, and slowly, like you were looking at the British. I hope you didn't do it. It's up another
I'm
fig
long the
today.
euro. I'm long the euro, and I'm short the British.
Okay, well, I think that I get it, and both against the dollar or against each other?
Both against
Against
the
the dollar.
dollar, but it
Okay.
turned out to be
Yeah, I don't
the
like
euro.
that. I don't like that trade because you could play that trade, basically euro British pound. You don't even need the dollar. You could go one, rather than zone defense, like what you're doing is like a zone defense, putting on two multiple trades, like especially in currencies, you can hit the actual trade. So you can do
Right.
British pound, euro. You don't even need the dollar involved unless you're really thinking it against the dollar,
Well,
not
depends
against
what
each other.
it
But
depends what account you're running. Some don't, have. I understand you could just do Euro GBP.
yeah, and no, and these trades are starting to work. We're long the euro, just outright. It's up like a figure and a half, and in a market where it should go down. So these clues are leading me to believe today, S&P's up a little, like 10 handles, 15 handles, that the market should come in here today, and face some selling, because I would think the dollar in this move would have some strength. Um, a market
You're
that,
saying
a
the dollar
market,
here on
yeah. So, it's probably gonna go back higher here. Um, the currencies against the dollar, it looks that way. Um, and
So
bonds
do you
are
think the dollar goes higher, or do you think the dollar goes lower, or
dollar
stays
goes
there? Like what?
dollar goes lower. Just a
Mhm.
full alert. Gold is breaking. It's down $50. I'm long it through an option trade, but we're long it kind of at this level. But it just looks horrendous. I know you're long it, but you're probably not long it anymore. But I'm in this option trade, but gold looks, it's funny. My level was a little below 3,200. I got a little impatient at about 3,220. It's semantics. It's not a big deal, but I mean, the market looks bad, and I'm feeling really confident, more confident, which disagreed with me that day when we hit 35, you know, and some change, 35.30, was the blow off top. And you don't see a lot of blow off tops. That was a blow off top. And again, in another cycle, it may hit that. But right now, we're down, gold goes down another 100 points. We're in a bear market almost. So, you got to be careful of that. I didn't understand the gold trade. Listen, I'm not a gold guy. You're my gold guy. It's a market moved around by central banks. It's not that big. So when they're buying, um, it goes straight up, and now I guess they're not buying. So it's heading lower and getting hit. And I'll tell you something interesting. You know how much gold's up on the year?
No,
20,
I'm not.
21. After this down move, it's still up 20%. So,
Good.
it could have a ways to go here. It could go down another 10%. Um, again,
Yeah.
we're sitting in it. We're going to make decisions on it later, but overall, it looks a little skittish. But sort of back to, the market that I like to look at, to assess the market, but it hasn't really worked too well, is the bond market. And the bond market, even this morning, came in bid, meaning prices were higher, the yield was lower. But yesterday, little sneaky bird hit 450, which is our level. So maybe that's why we sold off at the end of the day yesterday a little bit, because the market had hit 450. Again, we think it's going to go below that, and maybe some of the gold move is happening because of this bond market move, and potentially the currency moves. And it's like I was saying to you before, and we talked yesterday, you were like, gold was up no matter what. Last year, gold went up no matter what factor or whatever was in the market, gold went up. This year, after had the blow off top, and I like to call it the blow off top because I know you keep saying it's not a blow off top, but
No, I
record
don't.
record volume, key reversal interday, which is something we look at, where the market was higher and ended lower. We thought that was the blow off, but maybe all of these factors or markets that trade around gold, which have been flashing that gold should go lower, bond yields higher, dollar, crappy, that gold should go lower. Um, it's finally taking place. Again, we'll
It's
see.
just the market going up. It's just,
What are you
it's been.
talking about, dude? The gold is down $60 and the SPO is up 10. And the S&P probably will not end up today. So if the S&P ends down and gold ends down 70, what do you got to say about that?
As soon as the market starts dropping again, gold is going to be a buy again, because right now the market is just,
I
everything
totally time
else is
out.
trade.
Time out. I totally disagree with that. Okay. And the reason why, and I've been trading for 40 years, and the reason why gold was this protection trade, gold was the fear trade during this down move. Let me explain something to you. We're at 5,900 plus on the S&P. Okay. We started the year lower than this. We're up on the year. So how, if the S&P comes in 5% here, which is not a lot, you think they're running the gold in a fear trade or a protection trade? I think that whole mantra is off the board. And listen, I don't think the story has been written on tariffs at all. I think there is more of a story coming, but I would just say this, okay? They're looking at tariffs in the complete spin of what they were looking at it 3 weeks ago. They're like, okay, we got tariffs. Listen, let's roll back for a second. Minimum tariff on every country in the world will be 10% minimum. Okay. It'll be from 10% up to 50% potentially on China. Okay. So we still have tariffs. We still have this inflation thing, but the market is, you'll call it a new normal. The market has adjusted to quote unquote the new normal, and this is the new normal right now. And the new normal is simple. They're living with tariffs and what they're going to be. So, I think gold has been sort of xed out of the what do you call it? The risk off trade where you got to have gold in your portfolio. Again, I mean, I think the level is okay here for a trade, and potentially, it's still up 20% for the year, so maybe you can catch a move, but I'm just going to use one of my terms, yuck. The trade is yuck right now. It's a yuck trade. I'm seeing no stops in the market. I know in gold you get these, air pockets. I'd like to see stops hit the market. As we're on the air, it's making a brand new low down like 65 points. But I'd like to see some stops. But this is an area that we like to buy. So, we're going to hold the position, and it's yuck for the moment. There was not enough on the upside to get out of this thing for us. So we're in it. I don't know what your position is. In full disclosure, you probably don't have
My
one.
positioning is I have a relative value. You're gonna hate it. You're gonna hate
I
this.
don't even want to know.
Yeah,
Stop.
exactly. You're
Stop.
gonna hate this.
Your
You're
trades are
gonna
so. Listen, one thing you're going to get, okay, from trading with Larry and trading with me is you're going to get clear, direct response on actual actionable trades that are fairly easy to do. What do you have? Gold against lunar moon rocks or something? What's the trade? I mean, come on. What are you doing?
close, pretty close. You got it
I
right.
don't I don't understand it. I keep saying on the air.
You're looking at gold. Okay, the price has been coming down. Like any market that we trade has a lot of different players in it. CTAs are, I think, a big player here. But you also in gold you have ETF holders. They're a huge player. GLD, the inflows, outflows out of that ETF play big. You have the central banks, obviously. So yeah, I think the CTAs have been hitting gold pretty hard, but I'm not. Are you convinced that central banks are done buying? And with GLD inflows, you look at their inflows, outflows. I really haven't seen, other than that one day where you had that blow off top. Other than that, you don't have any statistically significant outflows that should make you go, wow, gold is out of favor here. So there was that one day with the ETF players that they sold off. So I think this is just CTAs here, and they're very fickle. Well, when they're done, and you think the market is going down, I'm starting to align with that theory, and I have some macro questions for you about inflation since you mentioned it. But I just think it's CTAs, and I think they're going to be done soon. So this could be setting.
We might not have any money left, but they're going to be done soon. I love it. Dude, you know how I know you don't have a position? Okay. Usually
I
you're
do. I have a
right
very
as
small
long as it
position in
goes.
gold.
Dude, you told everyone you were long gold yesterday. Now you're
I was.
long
I got
gold and
stopped.
short some.
Clearly, I got stopped on the move, and thank God I did. I had to stop on the futures. I'll tell you where. 32.29.
Nice,
It's
nice.
a good stop, right?
I don't know. I mean, yeah, it looks good right now when it's trading $25 lower, but
Yeah.
you know,
Now I'm
yeah, and you
exactly
know
now.
what? When that thing goes back
I'm right
up,
back.
when that thing goes back up, you're gonna be crying that you don't have it. But let me before
I'm
we move
gonna
on
buy
to what
it. I'm
before
looking
we
to
wait
buy
a
it.
second, before we move on to our next topic of the day, I want to know what the hedge is against gold. Okay. I said lunar moon rocks. I'm waiting. What is it? Palladium futures in Taiwan? Like
I'm
what?
short
What?
copper. Short copper. Short
Okay,
copper.
there you go. For everyone out there, these are like taking your car on the autobahn going like 250 miles an hour, okay? The first trade itself is very risky, and then you add on a little fuel to the fire and then trade palladium or whatever else your copper. eh, Very
Well,
risky.
palladium, you got to trade against platinum. You can't just.
I know,
Yeah.
but I'm just telling you, I gotta beat these trades out of you because I just in these markets it's so non-correlated and so algorithmic that things move in warp speed. Nothing is like it was 10 years ago. We have to stick to our disciplines. We have to really use stops. We have to keep everything going, and then, you know, basically what I like to do, and I think it's easy to do, is add to winning trades. So when we have winners, we want to get more aggressive. When we have losers, we sit in our shell and sort of either wait it out if we like the positions or not. Yesterday I want to just recap on the air. We recommended selling an out of the money call spread in the SPX for our S&P trader product. That trade actually made money. We had a put and a call on. We were under heat for most of the day, but the sell off
Oh,
at
wait
the
a
end.
second. So it was an iron condor kind of day.
No, dude, listen, I don't do an iron condor. Okay, an
You had
iron
that on.
condor, an iron
Basically, had.
condor. It's set up as an iron condor. Okay, at
Okay.
the end, and my trades always kind of set up that way. So what I do is I pick a direction, okay, that I think the market's going to go in. I give myself some leeway. We've gone over this yesterday, but for people that didn't watch yesterday, depending on how bullish or bearish I am, I set up the trade aggressively or not as aggressively. And yesterday we weren't as aggressive, so we gave ourselves the room. But when you say iron condor kind of day, when we got on the air yesterday, Thomas told us the straddle, which prices the iron condor, which is the out of the money put and call spread, um, was only pricing a 13 volatility or 12 volatility and a $33 price, which was the lowest price we've seen in a while. And the S&P had a $60 move and then it came in 30. So we weren't sitting pretty at all during the day.
No,
Um,
no,
so
that was a
these,
tough
these
trade. That
trades
was.
are tough to come by. But we got lucky. Again, we're going to look to sell some upside today, not that aggressively. So maybe look 30, 40 out of the money. Where's the straddle today, Thomas?
I got the straddle.
The straddle for everyone watching out there is the price of the at the money put and call. And the reason why we like to use that is it gives us the trading setup for the day. So the professional money is making a market that the market won't move. What's the price?
It's the exact same as yesterday.
So
32 and a quarter.
it's 32 and a quarter. So they've taken the volatility out of this stuff.
Yeah.
These are low straddle prices. So they're pricing only a 0.5% move on the S&P future on the day. I would think that that's not going to hold true. It may hold true at the end of the day, but those
Well,
trades.
you always say the market doesn't do something two times in a row, or is it three times?
I don't know. I go with two times, but that has not worked. We're on like 18 straight up days, so that thing disappeared a while ago. But we were going through a period, on a true move that the market. So when I say that, like, let's say the market's up and then it sells off massively on the close. The next day, it usually does not do that. So, we sort of play against that. But today, I think out of the money call spreads on the S&P product, um, maybe look to get short some mega cap tech today. I don't know. I got to take a look at the charts on Apple,
Nvidia, AMD keep
Microsoft.
going up
Yeah, I mean,
post
these stocks are unbelievable. The moves have been career. I mean, Uber got down to like 50, high 50s. It's trading almost 100. The one that was interesting yesterday, we touched on it a little bit, but Coinbase is being added to the S&P. So you'll see, as I used to trade this for a living, adds and deletes in the market. So things that were coming out of the S&P and going in the S&P. I don't know the true date for when this is happening, but you could kind of stay long this name. It'll be market driven, but wait for the print when it's added, and then you sell the print, meaning you sell the ad when it goes in. That stock was up 24% yesterday. Again, it's now going to be perceived as real. It's only got a $65 billion market cap, so maybe has a little bit of room to run there. But overall, with the pricing of the straddle and not a lot of news in the market, I mean, you never know, what Trump is going to say. I think he's like partying in MBS's mansion in Saudi Arabia. They got some party going on. Um, so it should be fairly quiet. A lot of these correlated. I'm really worried about the bond market. I really am worried. We're back to 450, could not hold the rally. We're trading at 440, 449. I think we can have a quick skate up to 475. People are going to get worried. And at some point, yield becomes very, very important because you can walk away from the equity markets and get 5%. I mean, that's something we haven't seen in years and years and years. We'd have to go back years to get this. So yields are up, and I think the better trade as we go higher is to lock in longer. I was always interested because the yield curve was flat for the last bunch of years. I've been buying 1 year and 2 year notes. But I'm going to get out of that and start facing off to long dated securities because they're pretty high. So, keep an eye on that. Again, I told everybody keep that next to your screen. That will play a role in the equity markets. And once you see that thing above 450 in a significant way, I think we're going to have a sell off. And you guys can hold me to
mark.
that.
So the sell off, I think there's a lot of stuff aligning towards looking for that. One of them, I think, is this OPEX that we have on Friday. We have massive, massive calls set to expire on Friday. What do you think?
You know what? I think it's important, but not as important as it once was for everyone out there. The greatest market, and we have a product that does this. We trade zero DTE, which is zero date expiration. We pretty much do that all the time. And that has taken the effect of these, um, expirations on a weekly basis away. Back when I was trading in my hedge fund and before that, believe it or not, for people watching, there was only one expiration a month. So that was really big. That held all the volume. But now with zero DTE, I think it's important, but not what it was at one point in time. So yeah, volumes are out there. They're big. you got to expect a move here. We are. But again, I don't have the validity on this move because I thought that we were going to top out, at 5750, 5800, and we've run at least another 150 points, which is 3.5%. And I think that's what you pulled up when you pulled up all these volume, figures, and the fact that people are getting out of safety and getting into risk, which is kind of shocking to me with the market being where it is. So
Right. What's shocking to me is that they didn't do that at the lows. They're doing it, and I don't think they even had a chance to do it at the lows because the news would come out, the market would gap up, and they didn't even have a chance. They feel like they have to. That's where the FOMO, I think, is coming from, even on an institutional level, and that's not a good recipe. I don't think that's a good recipe.
no, I mean it isn't, but as long as they're buying here, you gotta respect it and sort of stay away. The interesting trade as we've been on the air is gold has just massacred. Um, it's having one of its biggest down days. And I don't know, again, I like this level as long we weren't as patient as we should have been. We got long a little bit early, but again, we're using options. So we're losing, but we're not really losing much. So we're going to sit in this trade for a bit. We think this is a good level for a counter trend
If you like
trade.
the level, why don't you just roll it while it has a lot of premium in it at a lower
Because I'm
strike?
not down any money. I don't
Oh,
need to roll. No, I'm down very little, like a half a dollar, nothing. The beauty of options. But, you know, in full disclosure, options kind of work the other way. So let's say gold starts to move back up. My options aren't going to have as much juice because, you know,
that's what I'm
a
saying.
market came in and time disappeared. So you got to have a more extended move. It's just, you know, I've been bearish gold, this whole ride down. I feel good that I helped you not buy gold that much, but I think even though you were scared to admit it for 4 straight days, I don't know why, but you were scared to
Mhm.
admit that you were
I was
bullish
terrified.
equity. You were bullish equities, and I wasn't bullish equities, and you had that trade right, but you were like a little cowardly lion, so you
I
didn't
was a
go.
cowardly lion. Well, I saw you getting emotional. I didn't want to,
Well,
you know,
it's probably a good sign for you to fade me, but
that was the best side. I should have went all in. As you know, whenever I see the Bears get emotional, it's you got to go
yeah,
all in.
I'm a little emotional. I'm not, I wouldn't say I'm angry. I'm just not understanding the move. I mean, we're at 6,000. The high ever was 6,200. What good is coming out of this? I just don't see it. But
So I was looking at some shipping rate data, and I mean, the last reading that I have on Bloomberg is from May 2nd, but the shipping rate data, I mean, take a look at this. I actually wanted to share this with you. I think it partially kind of explains why the dollar hasn't been going up. But look at the shipping rate data from the Far East to the West Coast. I think to me, this is probably why we saw, to some extent, a downtick in CPI and why I'm kind of, I don't know, I'm not really buying 100% into this inflation narrative with tariffs. And this is probably, you overlay this against the dollar, this shipping rate chart against the dollar this year, it's the same exact chart. So it's like here's the dollar, right? This year, you
hmm
see that just going down
hmm
all year, and then shipping rates just going down. So it's the same thing, and it's it's like it's a currency. So you need the currency to transact, and there's just less transactions. So all this incrementally good news, and Trump is getting all these deals done. There's still tariffs in place. And no matter what he's going to do with the deals, there's going to be tariffs in place anyway. Until we see shipping rates go up and the dollar go up, uh, this whole mantra of the stock market erasing year-to-date gains, I'm not really kind of, I don't know.
What do you mean year-to-date gains? You mean year-to-date losses? You
Well,
said
they
they
wiped
erased
out
it.
the losses this year.
They wiped out
The
what?
the market has wiped out its losses this year. It's
Right.
all the way
So
back.
you were saying losses. They wiped out their losses. Yeah. I mean, listen, we're flat on the year. I think ironically, if they didn't even put tariffs in or do anything, market would have been 5,200 right now. So it's shocking. It's almost like, you know what it is? They caught everybody short. They ripped their guts out, and now we're here and we're going to see nobody has the guts to short the market. So we'll see where it runs up to. But we're getting closer to the opening. I like to run 45 minutes in general on a daily basis to get everybody ready, and then give them 10, 15 minutes before. I don't want to run into the opening. So really, I want to just close with, again, you got to respect the move. Um, I feel, bad that, I caught the bottom of this move, but for very little. We're here now. Again, I think we're at the top of the range. I don't know if that can expand another 50 points or 100 points. I don't expect new highs here. But the market is bid. We're up this morning, and we would say for our S&P trader to sell an out of the money call spread to start, and then depending on what happens in the market, we'll probably go to a put spread and give you that iron condor or short put and short call spread. As far as our other products, we're sitting short. We rolled, and we're going to sit tight. And if the market gets a little bit weaker here and finishes negative, we'll feel comfortable about maybe shorting one or two overextended tech stocks such as Microsoft and Meta, etc. So, that's sort of where we sit today. Keep an eye on gold. The level is a decent level to maybe counter trend trade. It's down, a lot. And the weird one is the dollar. The dollar is still weak, even though markets are moving up, and things are aligning to be very interesting. The 10-year note is at 450. And again, it's kind of a no level. Like if you look at a chart, really 475 is the level of fear. But we haven't been here in a while. And, you know, if if things are sort of the way they are, I mean, where is Trump? He was screaming and yelling to lower rates, and the bond market is big and beautiful, and all these other things. And really, the bond market is the serious problem out there. And we're going to start hearing a little bit more about this carry trade, where they're using basis between futures and cash to finance trades, sort of like the yen carry trade, and that trade may pop back again, and that caused a little bit of the down move last time. And those are my thoughts for today. Again, straddles pricing in quiet. Don't expect anything, but there could always be outsized news. So everyone be careful. I hope we gave you some good insight today. I'll throw it to you to close us up, and we'll be back tomorrow morning.
Stay away from FOMO. This is a market that has the propensity to suck people in emotionally. You see the market going up, but it's been hard to get those gains because of the gap up. So just kind of stay tight, pick your spots, be patient. The more patient I think people are in this market, the more money they'll make.
Dude, is that like subliminal advertising behind me where you have a green exploding up arrow? I just want to leave. Tomorrow, can you please turn that off so I don't subliminally have to buy the market?
Larry, all you need to know is
Oh, wait a second. I think I have that prop in my office too.
the
Anyway,
ball
everybody,
always,
I want everybody
always
to have a great trading day. Peace, and we'll see you guys in the morning. Take care.